Did you know that having more than $5,000 just sitting in your bank account could actually be costing you money? Most people think saving is enough, but with inflation eating away at your cash every day, it's not. The real game changer is learning how to use that money the right way, to protect yourself and actually grow your wealth. The problem with saving. You've probably heard all your life that saving money is the smartest thing you can do. Save for a rainy day, they say. Put your money in the bank and watch it grow. But here's the truth most people never tell you. Saving alone isn't enough. In fact, saving without a smart strategy is like watching your hard-earned money quietly lose value every year. This happens because of inflation, that invisible force silently reducing your purchasing power. Banks pay so little interest that your savings barely keep up, and in many cases, lose ground. You're doing exactly what you were told, yet somehow, it feels like your future is slipping away. Saving is necessary, yes, but it's only the foundation, not the full plan. There's a smarter way to put that money to work, so it starts working for you instead of against you. And here's the best part. It's simple, and you're about to learn exactly how to do it. The first $5,000. Building your defense. When you look at that $5,000 in your bank account, it can be tempting to think, now I can start investing, start making money. But before you jump into growth, there's a critical first step you can't skip. Building your financial defense, your emergency fund. This fund acts like a safety net, protecting you from unexpected events that can throw your life off track. Life is unpredictable. A job loss, a medical emergency, urgent car repairs, these things happen, often without warning. Imagine facing one of these situations without extra cash ready to cover expenses. That's when debt creeps in. High-interest debt that can take years to overcome. So the first $5,000 is a shield, not a weapon. It should be stored somewhere easily accessible, like a high-yield savings account. The money should be liquid, meaning you can access it quickly without penalties or delays. But here's the catch. This isn't a fund to spend on wants or just-in-case desires. Discipline is key. This money is untouchable unless it's a real emergency. What counts as a legitimate emergency? Losing your job? Urgent medical bills? Major home repairs or essential car fixes that affect your ability to work. It does not include vacations, dining out, or impulse buying. Now, consider how much you need. Experts generally recommend having 3 to 6 months' worth of essential living expenses saved. Essentials include rent or mortgage, utilities, food, transportation, insurance, and minimum payments on any debts. This amount might feel overwhelming, but think of it as your personal financial armor, providing breathing room to recover and adapt without immediate pressure. Why this range? If you aren't able to find a new job right away or face prolonged recovery, 6 months gives you more time to regroup. 3 months is a bare minimum to protect you from most short-term surprises. There's another vital point. Don't rely on credit cards or loans as a backup plan. Using debt to cover emergencies can feel like solving one problem only to create a bigger one. Credit cards often have high interest rates, 18% or more, that pile up quickly, sabotaging your financial progress. Building this fund takes time, patience, and sometimes sacrificing short-term pleasures for long-term security. But once it's fully funded, something remarkable happens. You gain emotional peace of mind. You stop worrying about what-if scenarios eating away in the back of your mind. And this is where your money can finally move from defense to offense. Because with this safety net, you're ready to grow and invest with confidence, knowing your foundation is strong. Remember, this first $5,000 isn't just a number. It's your shield against financial chaos. protect it, respect it, and then get ready to use it as the launch pad for building real wealth. Pay off high-interest debt, your hidden enemy. Now that you have your emergency fund in place, it's time to face one of the biggest obstacles standing between you and real financial growth: high-interest debt. Debt might seem like a normal part of adult life, but here's the hard truth. It's the silent killer of wealth. Take credit card debt, for example. The average interest rate can be around 18% or even higher. That means your money is shrinking faster than most investments can grow. Imagine this. You're hoping to earn about 7 or 8% per year investing in the stock market, but your credit card debt is charging you more than double that just to hold on to your balance. That's like pouring water into a bucket while your debt is pushing holes underneath it, draining your future. Paying off high-interest debt is the only investment that gives you a guaranteed return. Every dollar you put toward your debt is like earning double-digit returns without risk. It's that powerful. But many people fall into the trap of minimum payments, thinking it's enough. Unfortunately, it's just keeping the hole open, letting interest build, and keeping you trapped for longer. This debt is an invisible leak in your financial ship, silently pulling you backward as you try to move forward. So here's your next goal. Plug that leak. Put extra money toward the highest interest debt first. Credit cards, payday loans, or personal loans with steep interest rates. Once that debt is gone, your money is free to finally grow and multiply. And that's when your true financial journey starts. With no leaks in your bucket, every dollar works harder for you and long-term wealth becomes possible.
The first smart investments. Offense starts here.
Now that you've built your financial defense and eliminated the high-interest debt, it's time to step onto the offense. This is where your money starts working for you. Investing doesn't have to be complicated or intimidating. In fact, the best time to start is right now, even if you only have a small amount to invest. The key is to start with simple, beginner-friendly options that build wealth steadily over time. Let's talk about a few choices: stocks, ETFs, REITs, and yes, even small allocations in crypto if you're curious, but always carefully. Stocks represent ownership in companies. When the company does well, your investment grows. But buying individual stocks can be risky if you don't spread your investments. That's where ETFs, exchange-traded funds, come in. They're like baskets holding many stocks or bonds, helping reduce risk because you're not putting all your eggs in one basket. You can invest in an ETF with just a small amount of money. REITs, or real estate investment trusts, let you invest in real estate properties without needing to buy a whole building. They pay dividends and can add good diversification to your portfolio. Crypto? It's volatile and should only be a tiny part of your investments if you're comfortable with the risks. Don't put money you can't afford to lose in crypto. The secret is forming the habit. Investing isn't a one-time event. It's a consistent habit. Automate small monthly contributions. Over years, those small investments multiply thanks to compounding, the magic of making your returns generate their own returns. Remember, you don't need to be rich to start. You just need to begin. Imagine planting seeds today that will grow into a money tree down the road. Every small step counts. So start now, no matter the amount, and let your money work quietly and steadily in the background while you focus on other parts of your life.
Expand your earning capacity.
Managing what you have is crucial, but the game changes when you start increasing how much you earn. Think of earning more as the accelerator pedal on your financial journey. It speeds everything up. Most people focus only on saving and investing, but increasing your cash flow gives you extra fuel to invest, save, and grow. This is where side hustles and monetizable skills come in. Maybe you have a talent like writing, designing, coaching, or even repairing things. These skills can turn into extra income streams outside your main job. Even small side hustles can add up when done consistently. The key is leveraging your time and skills to multiply your earning potential. Your career is another powerful lever. Learning new skills, asking for raises, or moving into higher-paying roles all grow your income. Remember, every additional dollar you earn is a dollar more you could grow through investing. This is about personal power, taking control of your time, talents, and potential. As your income grows, your financial opportunities expand. You'll be able to invest more, save faster, and build wealth quicker. But here's a critical point most people miss. As your investments start growing, a new challenge appears: managing the momentum, staying disciplined, and keeping your progress steady over time.
Protecting your momentum.
You've built a safety net, paid off debt, started investing, and expanded your income. Now comes a critical phase many overlook: protecting what you've worked so hard to build. Growth can be fragile. Scams and get-rich-quick schemes prey on those eager to multiply their gains fast. Fear of missing out, or FOMO, can push you into risky decisions. Trying to skip the line by over-leveraging or chasing shortcuts often ends in losses. True wealth building is quieter, and sometimes, frankly, pretty boring. Long-term investing isn't flashy. It demands patience, discipline, and a steady hand through ups and downs. Think of building momentum like piloting a ship. Storms will come, but rushing or steering wildly won't help. Steady, calm navigation through risks is what keeps you on course. Be aware of your risk tolerance and avoid emotional decisions. Remember that your greatest enemy isn't market fluctuations, but impulsive behavior, fueled by noise and hype. It's not glamorous, but it's what actually works. Protecting your progress means staying focused on your plan, avoiding traps, and embracing the slow power of compounding and consistency. This steady approach is your best weapon to turn early efforts into lasting financial freedom. So, let's bring it full circle. That $5,000 sitting in your bank, it's more than just a number. It's the seed, the starting point of your entire financial journey. It's about shifting your mindset from simply saving to truly owning your future. You've seen how protection leads to growth, and growth demands new strategies to keep moving forward. But what comes next? There's a crucial part of this story that most people miss. A hidden challenge that can change everything. If you thought this was the end, you're only scratching the surface. Watch the next video to uncover the secret that separates those who build lasting wealth from those who don't. Because your financial future, it's waiting for you to take the next step.